Yeah, I'm losing my edge.
For you, Pete, this is essential to the mission statement here of the small exchange, constantly trying to create product that is styled for the everyday trader. We've spent years, Pete, you've spent decades trying to trade these products that were created for huge agricultural firms or, huge banks working to hedge foreign exchange risk. And now here in 2021, the small exchange is supplying products that were actually designed for you, the everyday trader, and not vice versa. You no longer have to try to, handle or harness this big product that was made for someone else. And so with that being said, that was my, I don't know what I'm doing there. It's like, I'm really small.
That was you assisting the guys moving the refrigerator in and then flying the Hoover flags where, dude, I got no money. Well,
I could show you what me helping the guys get the refrigerator
in your pockets out. Yeah, I got nothing.
It looked a lot more like this. You guys need a help? You guys need a hand?
You want an Oreo?
You're good. You're good. Yeah. I gave him a kind bar, and that was that sufficed. But anyways, I looked at this a little bit with Mikey G last week, Pete. I wanted to recap it with you and actually add a nice little statistic here at the end that I think people will be interested to see, because when you're trying out futures, Pete, and you're going for this world that has greater efficiency, it's easier to speculate in the short term. You've got some day trading margins on some of these products, like our stock product, Pete. That's just a little over $100, depending on what firm you're at. There, it's very easy and simple to access these futures. But when you get into this world, you got to pick the right one, because they may look the same, Pete, and they may even price volatility wise look the same as well. You've got the STIX product, which is a technology stock future. You got the NASDAQ, which is predominantly at this point, a technology stock future. Same volatility there, just shy of 30%. But one of these products, Pete, moves over $100,000 in the last year, while ours here at the small exchange has moved less than a 20th of that. And these are important statistics to know when you are picking that first futures product to get into, right? I mean, I don't know how you try out this other one that has moved, like I said, from being a $150,000 product at the early part of 2020 to it almost got to $300,000 in size, this NASDAQ future.
Right. And you know what? I think this is one of the interesting parts of futures, that the pure price exposure to whatever it is, whether it be the NASDAQ index or 100 or 1,000 barrels of crude oil, everyone loves that. It's a simple, there's not sitting through a lot of noise. Like when you look at ExxonMobil, sure. Does it drill for oil? Yeah, but it refines it and does 100 other different things. So there's this simplicity. But the sizing of futures to the other things you do. And when I talk about the other things the self-directed trader does to empower themselves to trade for opportunity is disproportionate. And that's where the problem occurs for all of us. And even this, the larger this becomes and those daily moves become larger, even if you're comfortable with a product that trades like this, the amount of movement you can get kind of take you off guard a little bit. So, I mean, these are products that have just naturally, and you've done some great research about the amount that so many products have inflated in terms of nominal dollar size. It doesn't mean like, well, it's still 100 ounces of gold or it's still 20 times the NASDAQ. It is, but the amount there with that asset price inflation comes an expansion and movement that often isn't easy to quantify or to manage.
Well, and that's why I wanted to quantify it one step further, because this is how I view futures. I view trying out futures in a matter of a couple of minutes. Like, to me, it's always like if you're going to test out a new product or a new product type, you've never traded options or some other derivative product before, the easiest thing in my mind is always, okay, go in there and buy or sell it, and then cover that position after a couple of minutes just to get a feel for how your account looks with that product in your portfolio and how you feel emotionally with that new product swinging around now that you have some stake there. And this is what is very frustrating about these traditional futures markets, Pete, and why the small exchange has worked so hard to redesign futures for the everyday trader, is that NASDAQ future, Pete, in a 5-minute period, I was just looking at Friday, the standard deviation on any 5-minute period was $300. With sticks, it's $10. It's actually less than $10. I rounded up there, which tells me the everyday trader who maybe has an account size of a couple $1,000 and I want to try out futures here, Pete, I can't try it out for a 5-minute period without risking a few $100s in this NASDAQ, let alone some of those outlier moves in NASDAQ. We've seen it in a matter of 60 seconds move thousands of dollars here, this contract. And that tells me I can't try that thing out. I can't reach for that traditional, institutional product and even try it for a 5-minute span. And so that's why it is essential to pick the right futures for you.